In this workshop, we're going to go over the deductions you have available to you to reduce your taxes, as well as how to get organized and stay organized so that your kitchen table doesn't look like your mailbox exploded and then every tax time feels like Groundhog Day. I know sometimes once you get through the organization process, you say, I'm never going to let this happen again. But if you don't have the right resources or tips and tricks to be able to not get to that point again, it's like Groundhog Day over and over again. So I'm hoping that in this workshop, I'll give you some easy to use, actually actionable tips to get organized and make sure that you aren't paying more taxes than you should. So the 3 quick tips that I can give you so that you can stay organized. Number 1 is, if you have investment properties, is to keep the financials separate. So this is whether you have, this is something you can use even if you don't have an income property. If you have a side business or you are a business owner, keep those finances separate. Have a separate savings account, have a separate checkings account, tax shelter account. If you have questions about the different accounts that you need to have set up for an income property, let me know and I'd be happy to answer those questions. So the first thing, keep the finances separate. Second thing, which is something you can do today, is to get a separate email. So let's say you have an investment property at 123 Street Road. Get 123 Street Road at whatever your email provider is, at Hotmail, at Gmail, at whatever. And from now on, everything with rental property related is going to go straight to that email account. Whether it's bills, contact with your tenants, just notes or things that you want to keep in mind, contacts, everything goes to that email account. That way it's separate and it's not getting lost in your personal inbox. Because if yours looks anything like mine, it has on the app, it'll have like 9,732 missing or unread emails. So put a separate email account for your investment property. This third tip I have for you is stick to one system, whether it's an app, a spreadsheet, a binder, a shoebox, whatever your system is, just stick to the one. Don't have the shoebox and a spreadsheet. Don't have the spreadsheet and an app. Don't have a binder and a spreadsheet. Stick to one. When you are trying to juggle too many systems and practices, it adds confusion and it can actually create a lot of mistakes. It feels heavy and you don't want to do it. And that's what got you into the problem of being unorganized in the first place, is not wanting to do it. By having one bank account, one credit card, one email, one system, you are going to limit the amount of expenses that fall through the cracks, because when you own rental properties, you want to track everything. Every single dollar that's coming in, every single dollar that's leaving. This is going to make sure that not only you know if the property is a wise investment, but also will ensure that you take advantage of all the deductions that you're eligible for. And I'm going to come back to that in a second. But also to ensure that you aren't spending more time than you need to. Having investment properties is like having a part-time job. It's not something, I know there's a lot of marketing out there promoting real estate as passive investment. I don't see what part of real estate is passive. It wasn't passive to save for the down payment. It isn't passive to manage your team if you aren't involved. It's not passive at tax time. It's not passive to find new tenants and to make sure the property's running. Or what about over the Christmas holidays when you're trying to spend time with family and your tenants call and say, there's water in the basement. That's not passive. So just having all those ducks in a row, takes the weight off of your shoulders. Okay, now I'm going to get back to deductions. In terms of deductions, there are two ways that I like keeping track of them. One is in a binder with a checklist on the front so that you know all the deductions that you're eligible for. The other is a spreadsheet. So what I will do is I will put the PDF in the comments so you can grab that if you want it. It's a list of all the deductions. So things that you can deduct are things like advertising, insurance, all of your utilities, if you pay for them, like hydro, gas, water, professional fees. So like if someone like me is helping you in terms of managing the finances of the property, or bookkeeping or legal fees, professional fees are all deductible. Repairs and maintenance, management and admin, office expenses, property taxes. Another one that a lot of people talk about is the interest on your mortgage. That one is a tax write-off. So what I'll do is I'll put the PDF in the comments below so that you can grab that checklist if you want it, just to make sure that you are claiming what you are entitled to claim, not missing anything, but also so that you're not claiming things that you actually aren't eligible to claim, which you may get away with this year and you may have gotten away with in the past. But it's best just to do things properly. If you have claimed something in the past that you're not actually eligible to claim, I don't think that you should claim it in the future, just because if you are, if it is noticed that you've been claiming this and it isn't eligible, they will go back and they will audit, and then you've lost all that profit, because they are going to say, actually, you do need to pay tax on this amount, and here's the bill. So I will feel free to grab that checklist. One of the last things that I want to mention when you are getting organized, if you are going to hire a financial planner or an accountant or a lawyer or a bookkeeper, anybody to help you keep and stay organized and address the priorities and make sure that things are running smoothly, one of the criteria that I like is make sure that they know real estate. Make sure that they also have, their feet on the field in terms of, if they also own income properties, they are top of mind of what's deductions. They are top of mind on the new rules and regulations. They are someone that you can ask a question, and if they didn't even think to know that question, you better believe that they're going to find the answer to that for you, because they want to know as well. One of the analogies that I always use is, if you have a baby and your baby won't sleep, you are not going to go and ask your friends who don't have kids how to get your baby to sleep. You are going to go and you're going to ask parents who have kids a little bit older than yours, or kids with babies who sleep through the night, to ask them questions like that. And the same thing applies, I feel, when you're looking for advice when it comes to your finances or anything else in general, is to find somebody who's in the same boat as you, who maybe is a couple steps ahead. So the three things that you can do today to get organized and make sure that you're getting all the deductions that you're entitled to is keep your financials separate, get a separate email account where you can send all that stuff, and stick to one system, whether it's an app, a spreadsheet, a binder, whatever it is, stick to one. In 2019, the deadline is always April 30th, and I wish you the best of luck. If you have any questions, you know where to find me, And with that, I will talk to you later.